Hey guys, this is another look at ZB starting on the weekly log scale charts. At left is ZB price, at right is 30-year yields. Here I'm using a version of TYX. I think we're working on the assumption that we've put in an intermediate term low right here that completes this cyclical 5 wave move down, and now we're looking for 3 waves up, a sustained counter trend move. The reasons for thinking that are, we had an underthrow. Well, I mean, first we have what looks like a complete 5 wave structure. This, ZB likes blow offs up out of channels and breakdowns down below channels. So we had, arguably a 5th wave breakdown of this channel at the same time that yield was hitting its 41-year secular channel here and a 618 target. Yield has been trading a series of measured moves. On TYX, it's basically running to 618 targets. It came up just a bit short right here. And, on price, we've had a weekly close back inside the weekly closing variation of this channel. This channel was resistance, and now we're back inside of it. And then last but not least, the other reason for thinking this is a major pivot down here is, we had this 5 wave move up, this ending diagonal from 2011 into 2020. And we've retraced down into the stealth fib support level for that entire 5 wave move. So if this 5th wave down, we're going to subdivide and extend, go down in extensions. This lows to lows extension would be potential resistance, but I'm not sure anyone is going to be home here. And one of the reasons for that is that yield isn't really trading a long setup that would be the inverse of this setup. I would expect the major intermediate high up here to equate to yield trading a long setup, and we're not really anywhere close to that. So if I had to bet, I would say that no one is going to be at home on this setup down here. So if we go to the various time frames, on the hour chart here, this is pretty simple. This is the low down here, and we've been trading these long from lows. And so this looks like 5 waves up, 3 waves back, 5 waves up, a very complex 3 waves back. So this would have to be a 1, 2, and then within this could already be a 1 of 3. This could be a 2 of 3. And we could be already in a 3rd wave of a 3rd wave. Which means that we should just go right through this potential resistance like it's not even there, like no one's home. And so this wave right here has been looking a lot like this first wave off the lows down here. They looked identical, except this wave right here is consolidating just a couple ticks below here. Over here, we had a weak 5th wave high. It was a divergent high, and then we sold off on the CPI data. Here we're consolidating below it, and there's a potential support on the yield chart that I'll show. But if this is going to be a 3rd wave, we should get some continuation right here. It's sort of, this structure is a little puzzling. Let's look at it on the tick chart. I'm not entirely sure what's happening right here, but if we don't take out this high, this obviously isn't a 3rd wave of a 3rd wave, and something else is going on. So yeah, so on the tick chart, this is this second long from lows right here. Right, we had the first one over here, and then we had the second one over here. And ZB does this on all time frames. that's sort of the read of coming all the way halfway back along twice. It's a 1-2-1-2 pattern. It's that nesting pattern that's building energy for the third wave move. And so looking at this move on the tick chart, this looks like a complete wave. We had this one up, and then this wave here traded as a highs to highs extension off of this wave one. So this could be a 1-2-3-4-5. That could be a complete move. And we are arguably trading this highs to highs extension for a second time. So we've traded it once to a 618 target, and now we're coming back again, which going up in extensions is pretty bullish and seems to jibe with the third wave of a third wave. And then within this, we had what looks like a wave one up, and it's a little unclear where we are in the structure right now. But within this wave, we're not trading an extension off of this. We could arguably be trading the 38.2 of this. But this wave, this extension needs to continue. So this would be a 1 up, a 2 down. This should be arguably the third of a third of a third wave. But I think the resistance is coming off of the yield chart. So if we go to in Thinkorswim, I've talked about this before. They don't have good live yield data. I've been using this formula for TYX, which is a CBOE derivative, and then I've been using the 30-year Treasury data from Fred. The problem is that's delayed often a couple of days. But I've just discovered that TradingView has this. And I'm not clear what this source TVC is. That might be TradingView proprietary data, TradingView Corporation maybe, I don't know. But this is live data and it's around the clock. I don't know where it's coming from, but this is going to be a work in progress, but I'm going to be using this going forward and try to correlate these yield setups with these setups on the ZB 2-hour chart. And so if we flip this yield chart to daily real quick, this is the 2-year cycle up we've had. And again, yield has been trading simple measured moves. The first one, it dipped in, retested, ran between the 236 and the 618. Then we traded a second measured move here that ran through its 236 target and closer to the 618 this time. And while we were doing that, yield punched out of its 2-year channel, just like ZB price underthrew its channel. So this seems like a major inflection point. And so the next real setup on yield would be, I have it drawn here, just simply the next measured move, which doesn't come in until what is this, 2.49 about. So within this move, if we go back to the 2-hour chart, we've had this latest channel here, and within this channel we traded a highs to highs extension right here. This is getting a little busy. Let me pull this back down. So yield traded this highs to highs extension 50. It spiked through its 618 target. This corresponds to ZB traded a lows to lows extension and spiked its 618 target and underthrew its channel. Yield was the exact opposite of that. And so while price has broken all of its short setups, yield is arguably defending that same anchor to new highs extension. We've had a reaction here and then here and then here. And what this is about the 3% yield mark. yield is having trouble falling down, staying below 3%. And so that is seems to be what's causing this zone on price that we're sort of finding resistance on. I don't think it's really related to any lows to lows extension on price. I think it's all about this yield highs to highs extension that needs to break. So again, the expectation is that yield is going to break this extension, and ultimately it's going to work its way back into a next measured move. And that's where we should start looking for some real resistance on price. Ideally, price would be kind of completing this first five wave move up, and that's when we should start to get sort of cautious again. Um, is that everything I wanted to say about this yield chart? Yeah, I think so. I mean, it's so technical, right? We captured the 618 target, we overthrew the channel, and then we've been trading on yield these measured move shorts, and this one coincided with a back test of this broken trend right here. So yeah, so going back to Thinkorswim, I have started, in addition to using the TradingView yield chart, and again, the purpose of the yield chart is, the setups that have the highest probability of success on price are where you have an equivalent inverse setup on yield. Those are the trades that you want to take, and you want to take with size. And these first two measured move longs on ZB have been fat pitches. And so talking about this one right here, I've taken this year, I've started charting. I was started by charting and watching UB, which is, UB and ZB are both 30-year duration. ZB are bonds with, I think, 15 to 25 years left in the term to maturity, and UB is over 25 years left on the term to maturity. So UB, there's just more time left on the bond, and what that means is the longer that term, the more sensitive price is to changes in yield. So UB runs further and faster than ZB. That's the point of trading UB. And so when you have a fat pitch, you should watch it on ZB, but then you can trade it on UB. And this, where are we? Yeah, what I want to show is this. If this is going to be a one up and a two back, and then another one up and another two back, UB came deeper than ZB. UB came within 10 ticks of this low right here, and it had to hold that in order for this 1-2 1-2 structure to get continuation. And so because UB came within 10 ticks of that, what that meant was that on ZB, ZB was trading its 50, but there was almost a full point to this low down here. And so it was a question of how deep this was going to come. But by looking, UB had only 10 ticks to play with, which means that ZB had only 4 or 5 ticks to play with. If ZB had come down 10 ticks, then UB would have broken its setup. And so, looking at UB helps you dial in the entry on ZB, is what I'm trying to say here. So UB is sort of an ideal trading instrument for big fat pitches on the ZB chart that are reinforced by a setup on the yield chart. When yield is really going to move, you want to trade UB, is what I'm trying to get to. So ideally, this week we should get third wave continuation. We're trading extensions, and those need to continue. And I doubt that there's going to be anyone home at resistance. That's all I have time for. Thanks, guys.